for beginner trading school. Short explanation: technical analysis is a method used by traders to evaluate and predict price movements in financial markets, like stocks, forex, or crypto, based on historical price data and trading volume. Unlike fundamental analysis, which looks at company financials or economic indicators, technical analysis focuses on charts, patterns, and indicators. Key concepts: 1. Price charts. Visual representations of an asset's price over time, e.g., candlestick charts. 2. Trends. The general direction the market is moving, uptrend, downtrend, sideways. 3. Support and resistance. Support. A price level where buying interest is strong enough to prevent further decline. Resistance. A price level where selling interest prevents the price from rising. 4. Indicators. Moving averages, MA, show average price over a period, e.g., 50-day MA. RSI. Relative Strength Index. Measures overbought or oversold conditions. MACD. Moving average convergence divergence, shows trend strength and reversals. 5. Chart patterns. Common patterns include head and shoulders, double top, bottom, flags, and triangles. These help traders anticipate future price direction. Goal. Use patterns and indicators to time entries and exits for buying or selling trades. Would you like a short course or daily practice examples based on this?